Treasury yields hitting a 12-week high on Monday. Could rates be on their way higher for real and for a longer period of time? Let's answer it. Welcome to Trading Nation. Max Wolff of Manhattan Venture Partners and Rich Ross of Evercore ISI are your Trading Nation team today. Max Wolff, Treasury rates higher or lower 6 months from now?
Yeah, so I actually think they'll be even lower. I don't think they're going much higher. We might see a rate hike push them up. My guess is just that international and domestic weakness is going to put them back down. And the funny thing here is we know they're overbought. We know other assets are overbought. Money still has to run somewhere, and habits are hard to change.
Wow, and what's going to drive those yields higher?
Probably, I think we're going to see a situation where we have a rate hike, so that's going to create some weakness here. Then we're going to have weakness in the overall risk asset markets, which still look really overbought, and we're going to have a little more money run to the U.S. from other locales. We're going to have a little more money go to the safety, and that's going to push those rates back down.
Okay, Rich Ross, do the charts agree with Max's analysis?
You know, Brian, it's almost like a trick question here. Yields have been in a downtrend, as we know, for over 30 years, and any attempt to call a bottom has been futile at best. But you know what? We're going to give it a shot here today. When we look at the short-term chart, what do we see? A pretty strong move off the bottom, and then we consolidate in sideways fashion, much like the market did. And then last Friday, we see sort of a breakdown in risk assets like the S&P, which corresponds with the breakout from that consolidation in yields, if you will, sort of breakout in quotations. We run into resistance today. At around 170, we fail in there, but we don't back off too much. So I think there's a case for some short-term upside here. And when we look at the weekly chart, at least we see the potential for a double bottom at an all-time low. When we look at that low, it's a false breakdown to an all-time low, which is not dissimilar from the false breakout to a new high in the S&P 500. Also back in 2012, that last surge that we saw there also occurs in July, which is right around where we bottomed this year. So I think there's a case to be made that we have some further upside. To answer the question you asked, Max, higher or lower 6 months from now? I say higher, but not meaningfully so.
Okay, higher but not meaningfully so. Max begs to differ a little bit down the road, looking for higher rates. You said higher or lower rates, Max?
No, I think we're going to see lower, but not
rates.
Much lower.
We're going to see bonds move up and yields move down. My apologies on that. You know, got it flipped around. Max Wolff and Rich Ross, thank you both very much. Certainly everybody watching the Treasury curve with the Fed. Next Wednesday, folks, in 9 days, is the next Fed meeting where they're going to make a decision. Could be a big one. Thanks for tuning in to Trading Nation. I'm Brian Sullivan. We'll see you next time.